Welcome to Industry Focus, the podcast that dives into a different sector of the stock market every day. We're talking about healthcare today, April 4th. My name is Christine Hargis, and one of the Motley Fool's expert healthcare contributors, Todd Campbell, is joining me on the phone. What's going on, Todd?
Hi, Christine. How are you today?
I am doing great. I'm about to head on vacation tomorrow, so today is my Friday.
Oh, fantastic. That sounds like a lot of fun. You going to do something somewhere nice and sunny?
Hopefully. I've been seeing in the forecast a lot of rain for California and Hawaii, which are the two places that I'm going to, but I'm hoping it's temporary rain where maybe it's a couple of raindrops at like 4 p.m., but the rest of the day, sunshine. We'll see.
You'll bring the sunshine wherever you go, right?
Oh, I hope so. That certainly hasn't been the case in Alexandria lately, but that's okay.
Well, that's typical for April, right?
Yeah, April showers. Anywho, so
Mayflowers.
Exactly. Japanese drug maker Takeda announced on Monday that they're looking at buying rival Shire, sending shares of Shire higher and Takeda lower. That's a very typical acquisition announcement reaction. Although this wasn't quite an announcement yet that the acquisition is happening, it's just an announcement that they're thinking about it. Todd, what do you make of this?
This is great fun because we actually get to talk about some stocks that aren't U.S.-centric stocks necessarily, right? I mean, you and I and probably most of our listeners don't spend a whole heck of a lot of time thinking about Takeda. and maybe we should be, right?
Yeah.
Because, I mean, this is a, global health company, and it's been around for almost as long as the United States of America. That's how long this company's been around. So it may be a little bit surprising that we don't talk more about it. One of the things I think that is interesting, since we are talking about, a couple foreign companies here, you get Takeda, which is obviously a Japanese company, you get Shire, which is a UK-based company. There are some rules that apply in the UK that don't apply here in the United States. And the rule, called Rule 2.7 of the UK City Code on Takeovers and Mergers, basically applies to everything in the UK. If you're seriously thinking about making a bid for a company, then you actually need to disclose that. I think it's like 28 days prior to an offer being made or walking away from the deal. And that the idea there is that it gives all shareholders equal insight into whatever discussions may be going on between companies. Now, Takeda has not talked to Shire's board as of the time of their announcement that they're thinking about making a bid for Shire. So there's nothing firm on the table that's been presented. But like you said, that was enough to send Shire shares soaring, I think 17% on the day, and to cause Takeda's to tumble a little bit.
Yes, and we should get a firm decision by April 25th. Essentially what their Monday announcement did was start the countdown timer. So
Right. And the April 25th is either if they make an offer, then it starts another clock. It doesn't the decision by Shire's board doesn't necessarily need to come on that day, but that's the day that Takeda would have to make the offer.
Right, exactly. And so what investors are considering now is, does this acquisition make sense? And can Takeda pull this off? This is a company that has a lot of debt on one hand, but as we mentioned, they're based in Japan, and it's a lot easier to get relatively cheap financing in Japan than it is pretty much anywhere else in the world, particularly when it compares to the United States. For example, companies like Takeda can typically get financing for around 0.34% on their debt, which is far below what blue chip U.S. companies typically pay, which is more in the neighborhood of 3.8%. So even though Takeda has quite a bit of debt already, $11 billion, it is potentially more doable because of the fact that they are based in Japan than it would otherwise be.
And the company also, Christine, is a little bit on a little bit better financial footing than it was, say, 2 or 3 years ago. They've actually got leadership in there now that's doing a good job in sort of carving out some costs and trying to make this company a little bit more profitable. And that's one of the reasons that you saw their earnings last year grew at a much faster pace than their revenue did. So that's giving them a little bit more flexibility to do some deals too. They're like we mentioned, they are a global company. They have sales in 70 countries. As a matter of fact, about 70% of their workforce is actually outside of Japan. And their goal is to get even bigger. And they particularly want to increase their exposure to the United States market, which makes sense, right? The U.S. is the biggest market in terms of drug spending. And Shire would do that. I mean, Shire gets more than 2/3, I believe, of their sales in the U.S. market. So that's a plus. They may also find a willing seller in Shire, because if you remember, you and I talking about this back in, what was it, 2015 or something like that. Shire was in play with AbbVie trying to acquire it. AbbVie tried to buy them for $54 billion and eventually ended up walking away because tax inversions fell out of favor. U.S. basically put a stop to those. So you could end up finding a willing seller. But like you mentioned, we're not sure if this deal could get done because Takeda is actually smaller in terms of market cap than Shire. It does a little bit more in revenue. I think, depending on how you look at currency exchange, it's probably around 16 billion or so in U.S. sale in dollar terms of sales, where Shire does about 14 billion. But if you include the debt that Shire has now, you're talking about a deal that's like 60. I think Shire's enterprise value is like 66 billion. So this would be more like a merger than it would be necessarily a takeover.
Which does make this kind of unusual. And I think it falls into the broader story that we've been talking about of atypical M&A. We've seen a lot of somewhat unusual deals either being announced or being considered. For example, earlier this week, we heard that Walmart might be considering something with Humana, whether that is an acquisition or it could end up just being a partnership. But that is, I think a couple of years ago, we would have been scratching our heads like, what? This is coming out of nowhere. But when you consider other deals that have been announced recently, like CVS and Aetna and Cigna and Express Scripts, this seems to me just another example of the potentials for M&A really expanding into areas that might have otherwise seemed unusual.
Yeah, and the timing of this may not be that bad either when you think about it, because Shire sales, hard to say, are actually, the share price has fallen about 30%, not including the recent spike in them. Because of some generic concerns and some slowing top line growth. They're going to go from double-digit growth to, or high single-digit revenue growth to mid-single-digit revenue growth this year. And earnings, actually, after growing 16% last year at Shire, are expected to actually pretty much flatten out this year because of some expenses that they have. So, you've got a company that has, the share price has fallen. I think it's trading at only like 10 times, something like that, forward earnings. So, Takeda might be looking at this saying, well, if we are going to strike and try and do a big deal to boost that U.S. exposure, maybe this is not a bad time to approach Shire.
Yeah, and I'm sure AbbVie, as you mentioned earlier, is still looking at Shire and wondering whether they might want to step in here. Pfizer also has been mentioned as a company that might potentially want to acquire Shire. So we'll see how this all shakes out. If a deal does come to fruition, that will make this the biggest Q1 for acquisitions in more than a decade, according to Bloomberg, which is pretty incredible to think about. And we'll be sure to keep everybody posted.
There's one more thing before we jump, Christine. Investors in Shire or considering Shire might want to recognize that Shire has already announced plans to try and spin off its ADHD medication business, its neuroscience business, so that it can focus on its rare disease business. So you've got that dynamic at play here too, with Shire trying to figure out, how to get the most, value out of its rare disease business, which theoretically by investors should be priced more expensively maybe than it is today. So there's that in play. And also don't forget that Shire went out and bought Bexalta in 2016, a $32 billion deal. And as a result, they had to take on a bunch of debt. So they've got about $19 billion in debt. So if you're looking at and scratching your heads and going, wait a minute, why is the market cap of Shire only $44 billion now when the deal didn't get done at $54 billion 3 years ago? That's because the enterprise value is actually $66 billion because of the debt. So you got to keep that in mind as you're trying to figure out what price Shire could trade up to.
Yep, that's a great point. A stock that's covered frequently on Fool.com, but hasn't made its way onto Industry Focus until now. Alkermes, the ticker is ALKS, received a refuse to file letter on Monday regarding their drug ALKS 5461 for major depressive disorder. This is not a good look for the company. A refuse to file letter is not a rejection, but rather the FDA handing back the application to a company and saying that they can't evaluate it in its current state. How did Alkermes mess this one up?
It's like a slap on the wrist, really, right? It's like you submitted this to me. I'm not going to look at this. This is not the report that you were supposed to submit. Okay, so we're talking about a antidepressant drug, and I want to thank Alkermes for not creating some weird, crazy generic name that we're going to struggle to pronounce today. 5461 is so much easier, right, Christine?
Yeah, it's still awkward though. 5461.
So we're talking about a major depressive disorder drug, MDD drug. It's a multi-billion-dollar indication, and there really hasn't been a tremendous amount of innovation in this space. And there's a big unmet need because, frankly, there's a lot of people who suffer from conditions where antidepressants are prescribed, and in roughly 1/3 of those patients don't respond to the existing treatment options that are out there. So 5461 was considered in trials for use as adjunctive therapy. So if you're failed to respond to these other existing treatments, maybe you could then go and take 5461. One of the things that I think investors should recognize is that maybe this isn't so surprising, because typically what the FDA likes to see is it likes to see 3 trials with 2 of them succeeding. There's usually a very high placebo effect in depression trials, Christine. So it's kind of expected that you're not going to get all 3 to succeed. But in the case of Alkermes 5461, it actually only passed the efficacy hurdle on 1 of the 3.
Right. Back in 2016, it failed to meet the endpoints in 2 of these phase 3 trials. And so for a while, it didn't look like this drug was really going anywhere. But optimism was renewed based on this 3rd trial. And I'll also point out that caused Alkermes' expenses to swell, because they seemed to really anticipate that this 1 trial would be enough for the FDA to accept the application and then hopefully to grant approval for this drug. And so now that timeline has completely shattered.
Yeah, I think what they were hoping for is there's a slightly different study design between the first trial that failed and the 3rd trial which succeeded. And that trial, basically what they did is they had, if you failed to respond on placebo, you were re-randomized in the trial. The idea was to try and tamp down on the high placebo effect that sometimes you get in these depression trials. And I think maybe that raised some question marks. It may also be that despite the fact that this was studied in over 1,000 patients, so they had a pretty robust amount of safety information they could provide to the FDA, even if they didn't have necessarily the efficacy from all 3 trials, they had all that safety information. There could still be some concerns from the FDA regarding the fact that one of the 2 active compounds in 5461 is buprenorphine, which is an opiate agonist. So, you have some concerns perhaps about what the potential is for risk of abuse, because Alkermes has got to meet with the FDA and sit down and actually talk to them and figure out exactly what the FDA's concerns are. But one of the things that they did say in their press release was that sounds like they want some bioavailability data on buprenorphine in patients. So perhaps they just want to make sure that there's no concern there. That, and of course, wanting the extra trial, it appears they want an extra trial to back up that efficacy finding.
Yeah, management sounded a little bit incredulous about this. They seem to not really understand what the FDA was asking of them and why it was coming now. They spoke to the long history of development of this drug and the rest of Alkermes drugs. And basically what they said, it doesn't make any sense that the FDA would do this now. I mean, this management team is clearly a little bit embarrassed by the refuse to file, and rightly so. And they're not really providing a lot of clarity on what exactly the FDA is asking for. And I don't know whether that's because the FDA hasn't provided that clarity yet, or if it's just management kind of reacting a bit harshly to this news. But all that is to say that it's not quite clear where exactly the company is going with this particular drug from here.
Yeah, there's some egg on the face here, I think. And I think that their expectation was that the FDA has suggested it's more willing to consider novel trial designs and maybe, I don't want to say set the bar lower, because that's not necessarily the case. It's not like they're trying to approve unsafe drugs, but maybe a more willing FDA. And I think that they maybe got caught off a little bit off guard by that. one of the things that you'll have to remember as a listener is that, you usually have a type A meeting that follows the refusal to file. That should occur within the next 30 days. So I would imagine the next time that they have an investor conference or a presentation on the website or whatever, you might want to tune in if you're an Alkermes shareholder and see if there's any update on that from that type A meeting. It's going to be interesting to see what they do now, because these trials aren't necessarily quick. It's not like they can get this done within 3 months. And, one of the things that raises the question of, well, what do they want to do with this drug? Are they going to continue to spend money on it, hoping for another positive efficacy readout when they had 2 that failed? And, the odds seem pretty high for a failure in running another one. And the competitive landscape is going to shift a little bit too, Christine, because Johnson & Johnson has a drug for treatment-resistant patients in phase 3 trials that should read out data this year and theoretically could go to the FDA this year.
Yeah, that could completely change their competitive advantage. One thing that you mentioned that I want to go back to is this broader question of how lenient should the FDA be? Because this refuse to file letter kind of speaks to the way that the FDA is thinking about the approval process. And I feel like there's been a lot of scrutiny lately, especially with the change in administration, about how the FDA should consider atypical trial designs and stuff like that. And so you can see that there are other companies other than Alkermes that reacted to this news because they're maybe considering a somewhat novel trial design, or even just other companies that are working in the same space. For example, intracellular therapies sold off about 7%, I think it was, on the news, because they're also working on a central nervous system drug. It's a schizophrenia drug. And so because that might be similar to what Alkermes is doing with their drug, there was a little bit of investor fear that maybe the FDA won't be as accommodating as people had previously thought.
Yeah, and I think, Christine, another takeaway for listeners might be that, just because you have one positive phase 3 readout, don't assume that that's going to be enough to get you across the FDA finish line. And I think that sometimes we forget that as investors. We see positive phase 3 data and we immediately take the leap and think, ooh, commercialization opportunity, right? 10 months, the FDA will say, okay, and this will be on the market, bringing all sorts of bucks in for the company. And you need to really, do your due diligence and do your homework. Look back at all the trials that were done. Make sure there weren't failures to go alongside with the successes, and take the management's comments with a little bit of a grain of salt, because as you alluded to, management was pretty bullish about their submission to the FDA, and that might have, unfortunately, I don't want to say misled. That's not the right way to phrase it, but may have informed investors in a way that maybe investors shouldn't have been informed.
Yeah, exactly. Before we wrap up, I think we should speak a little bit about what else is going on with Alkermes, because this is not a one-drug company. They have several drugs that are already on the market, and they do have a wider pipeline. So, Todd, I'm curious to get your thoughts on the company as a whole.
I've actually been a fan of this company. I like the company. I think that they've shown that they know how to help develop drugs. They get a lot of royalty income. They've been involved in some other really popular multi-billion-dollar drugs and the development of them. I think that they'll bounce back from this. I just don't know where they're going to go with 5461 from here. So I think that from an investing standpoint, maybe kind of wait, on the sidelines here, see how this all sort of washes out, see what happens with the type A meeting, and then make a decision of whether or not the stock's been beat up enough to whether or not it warrants going out and picking up a little bit of some shares.
All right. Wise words. Some housekeeping notes before we sign off for the day. As we mentioned at the beginning of the episode, I'm going to be out for the next week and a half or so. I'm heading to California for a little bit and then to Hawaii, Maui specifically. So next week's cast will be slightly different than usual. You can all look forward to that. As usual, I'd love to receive any travel tips you guys have and want to send our way. Our email address is industryfocus@fool.com. You can also find me on Twitter at Christine Hargis, or if you have trouble spelling my name, you can find the show's account at MF Industry Focus. As always, people on the program may have interests in the stocks that they talk about, and the Motley Fool may have formal recommendations for or against. So don't buy or sell stocks based solely on what you hear. This show is produced by Austin Morgan. For Todd Campbell, I'm Christine Hargis. Thanks for listening, and Fool on.